Hi, everybody. Welcome, and thank you for joining us today for our Ask an Expert panel discussion. We have a panel of experts here all ready to answer all of your pre-submitted questions. If you do have any more questions throughout the presentation, put them in the questions tab to the right of your screen, and we will try to get to them if we have additional time. So I just wanted to first say that we are not fiduciaries and we are not giving investment advice. This is for educational use only. So if you do have any questions that need financial advice, you'll need to consult with your CPA or your tax advisor. All right. So Brandon, tell us a little bit about yourself and what you're going to be speaking with.
Hi, my name is Brandon Hall. I'm the Chief Operating Officer here at Midland Trust Company, and I've been with the company for 17 years now. And today, the questions I'm going to answer all revolve around 401k or individual solo 401k questions, as well as just basic general IRA questions.
All right,
Glad to be
thank you.
here.
All right, Sasha.
Hello, my name is Sasha Bretz. I have been with Midland going on 5 years. I am a certified IRA services professional, and I am one of the team leads in client services. My background is in real estate IRAs, although I'm working on other asset types at the time. But with my background in real estate, I am going to be answering questions today related to that.
All right. Thank you, Sasha. Matt.
Thanks, Brenda. So I'm a senior business development associate here at Midland. Been here for a little over 3 years. So I help answer any preliminary questions, help onboard new clients to Midland. Today I'm going to be focusing on futures investing and cryptocurrency investing in IRAs.
Great. Thank you. Whitney.
Hi, I'm Whitney. I am our Senior Vice President of our Compliance Department. I work closely here with all of our departments just to make sure that we are following everything we need to with our regulators, as well as just overseeing some of the investments that are coming in. So I'm going to be answering your questions today on LLCs.
All right. Thank you. And Teresa.
Hi, everybody. I'm Teresa with Midland 1031. I'm a Senior Vice President with our 1031 Exchange Department here. I'm coming to you live from our Chicago office in downtown Chicago. Greetings from the Windy City. In case you haven't figured it out, I'm going to be talking to you today and answering questions about 1031 exchanges.
All right. Great. Thank you all. And I didn't introduce myself. I am Brenda, and I am going to be moderating this webinar. So, all right. So we did receive a bunch of questions in advance. So we're just going to jump right into it. All right. Brandon, can you discuss 401ks, please?
Sure. And before we begin, I do want to let everybody know that Midland actually is an umbrella of several companies, and we do 1031 exchanges as well as self-directed IRAs, and we have forms business as well. And so I don't want people to get confused between the businesses. So we're going to end up talking about 1031s the last 10 minutes of the presentation, and that's when Teresa will speak. So anything that we're talking about between now and Teresa's turn applies primarily to retirement plans and not 1031s, and vice versa. When she's speaking, some of the rules that she goes over revolve around 1031s and maybe not IRAs. So just keep that in mind as we move forward. We did get a lot of questions about IRAs and 401ks and specifically individual or solo 401k plans. So I want to point out the differences between those. So let's start with the difference between an IRA and a 401k. So they're very similar. They both benefit you when you retire. They both have similar tax situations related to them as far as when you get taxed. But they do fall under a different set of rules and guidelines. There are 4 types of IRAs out there. There's a traditional IRA, a Roth IRA, a SEP IRA, and a simple IRA. And I'm not going to get into the details on each of those today, but I will say that the traditional and the Roth are individual retirement accounts that are opened by an individual, whereas a SEP and a simple IRA are employer-sponsored IRAs. So you have to have an employer sponsor that plan. Okay, and then on the other side of the table, you have qualified plans. These are plans such as 401ks, 403bs, 457s. You may have heard of some of these. And the qualified plans are controlled by a trustee, so they're a little bit different than an IRA. Here at Midland, we offer what we call an individual or solo 401k. So what is the difference between an individual K and a regular 401k? Well, a regular 401k typically has employees involved, okay? And when you have employees involved, the government wants to be involved, so as usual. So when you have employees involved in 401k plans or any type of qualified plan, the plans have to go through discriminatory testing on an annual basis. And so there's a whole industry revolved around discriminatory testing. It would be unfair for a plan owner to match one employee's contribution match at 5% and somebody else at 3%. That's discriminatory. So the plan has to go through these testing phases every year. Midland is not in the testing business, so we don't offer what we call full-blown 401ks to companies that have employees. We only offer these plans to individuals or solo 401ks, which are self-employed owners who do not have any employees. And because they don't have any employees, the plans don't have to be tested in the same manner. So that's the difference between an IRA and a 401k. And the 401k is, we used to say, the Cadillac of retirement plans. It has the best and highest contribution limits. Now, maybe that's an outdated analogy. Maybe it's the Tesla of retirement plans or the Ferrari, but the 401k is definitely the premier product because of the benefits that it gives you.
Great, thank you. Could you discuss how individual 401ks work with UBIT?
Okay, that's an interesting question because UBIT does not come up very often in retirement plans. UBIT stands for Unrelated Business Income Tax, and 99.9% of our clients' transactions are not affected by this tax. This is a tax that is placed on IRA accounts when an IRA takes on debt, which is very rare. So let's say somebody had $200,000 in their IRA and they wanted to buy a $300,000 piece of real estate in their IRA. Their IRA could actually borrow the other $100,000 through a non-recourse loan. But now the IRS doesn't like the fact that the borrowed money is helping the IRA grow faster than it can on its own. So they tax the portion of the revenue that's attributable to the loan, and that's via UBIT tax. But that UBIT tax does not apply to 401k accounts. So if you're interested in buying real estate that has debt attached to it, it may not work as well in an IRA, but it may work much better in a 401k because you don't have to worry about that tax. But again, that tax only affects less than 0.5% of our clients' transactions. It's very rare.
All right, thank you. So converting from solo K to a self-directed IRA with Midland, what precautions do you have with that?
Yeah, when I saw this question, I wasn't quite sure. The person who wrote it may have been more interested in what the accounts can invest in than what type of account it is, because I'm not sure why you would want to go from a solo K to a self-directed IRA. Other than the fact that you think that you can invest in something different in the self-directed IRA than you can the solo K. Because the solo K is a premium product. It's a better retirement plan that gives you far more benefits than the IRA. Both plans can be invested in alternatives or traditional assets. There's no difference in what they can invest in. So I'm not sure why you would want to go from a qualified plan to an IRA, but it can be done as long as there's a triggering event. And the most common triggering event is termination of the plan or termination of employment.
All right. Is there a limit to how much can be moved from a 401k to a self-directed IRA in a year?
Again, there's probably not a benefit to doing this. It's this very similar question to the previous question. Again, you have to have a triggering event to move from a qualified plan to an IRA. My wife teaches second grade, and she has a 403B through the school system. And I would love to move that money here to Midland so that I could be more creative with the investments that we make. But unless she's terminated or quits, it's pretty much locked into the plan administrator that the school system chooses. So first off, your first question is it eligible for rollover? And if it is, and you're terminating the plan, or you're no longer an employee of that company, then you could definitely roll it into an IRA. But there's no limit.
Okay, great. And then how to maximize tax dollars into retirement accounts? Is it better with SEP or an S Corp? What account would be best for that?
Well, an S Corp's not a type of account. That's a type of business entity. So that really doesn't matter. That doesn't affect anything. To maximize the contributions to a retirement plan, Roth and traditional IRAs are capped at either $6,000 or $7,000, depending on your age. SEPs are capped as much as at $58,000, depending on your income level. And then the 401k or the solo 401k, depending on your age and your income, could be as high as $65,500. So again, that's why we say that it's the premium product, because if you have enough earnings, it has the highest contribution limit of any of those plans.
Great. All right, we're going to jump into IRAs now. Matt, can I trade futures in a Roth IRA account? And if yes, can you talk about the fees?
So the answer is yes. It's a very popular investment that our clients use to use Roth IRAs or any IRA, for that example, to trade futures. So as far as fees, generally you're looking at a setup fee when you open the account, a transaction or processing fee to fund the futures account, and then an annual asset fee that Midland charges, which is a flat annual fee.
All right. Can I open a brokerage account within a self-directed IRA?
You can. So obviously self-directed meaning you can invest where you would like. And we do have, at Midland specifically, a couple of relationships for trading at brokerage. So TD Ameritrade and TradeStation tend to be where our clients are investing in brokerage, so on the equity side.
All right, thank you. And what is the best way to trade the S&P futures?
So this kind of goes back into the first question. So yes, you can. How you trade or invest in futures through an IRA is at a futures broker. So Midland handles all of the IRA reporting, anything that comes to do with the IRA account. The futures broker is the one that actually does the investment. So if you have a futures broker that you're investing in through your Midland account, they'll have the options to invest in the S&P 500 futures and other options as well.
Great, thank you very much. Whitney, could you tell us a little bit more about checkbook control with an IRA LLC?
Yeah, so checkbook control LLCs are a really popular investment vehicle. They give the owner of the LLC, so essentially whoever has the IRA account, a lot more control over their investments, such as, let's say you're looking to buy real estate and you need to do some rehab. It's a lot easier because you'll have your own LLC checking account. You can just disperse those funds much easier than necessarily coming to Midland every time and making that request. We'll also have clients who, want to bid on auction properties. Again, it's a lot easier because they have the option to enter into those agreements on their own, send the money immediately. So, it's a little bit of a quicker turnaround if they're looking to do things like that than necessarily coming through Midland to make requests for everything. We'll also have clients who will hold things like cryptocurrencies that way as well. So again, it's just another investment vehicle, gives you a lot more control, a little bit more options. And again, if you have a lot of assets, sometimes it can make sense to use an LLC to consolidate and possibly reduce some of your administrative fees. So we'll have clients who will do that as well.
All right, and what are you required to establish the LLC in order to open a Midland IRA account?
So first, if you're looking to do an LLC here at Midland, so what you'll first need to do is have the IRA account established first. You'll need to have some funds in your account. What we'll then send over is we're going to send over an engagement letter. We're going to need to know where you want the entity organized, what you want it to be called, whether, who's going to be the manager. A lot of times clients will have themselves be the manager. So again, that way they can have control over those funds that are going to be in the bank account. Again, the client's going to need to establish a bank account. We work and get the EIN. But so those are some of the things that are going to be needed in order to get the LLC set up. So we usually get that on the front end pretty quickly.
All right, great. And what types of investments can you invest in using your self-directed LLC?
So anything that your IRA pretty much can hold, is going to be able to be held in your LLC. Again, it may just be a way to consolidate some of your investments into one place. If you're really good at keeping accurate records and can send that over, then at year end, things like that, people like to do that. But anything that you can hold in your IRA, you can hold in your LLC.
Great. Thank you very much. Sasha, what are the restrictions concerning renting real estate held in the LLC?
Okay, here we go. So, regarding the real estate in an IRA in general, and then putting it in an LLC, the restrictions are the same. So, whether your IRA holds the property directly or indirectly through the LLC. So, the main concerns are personal use. You cannot use the property at all. And that also includes a lineal ascending family and descending family. So there's yourself and your spouse. And then if you go up the family tree, you have parents and grandparents. And then down the family tree, you have children and grandchildren and their spouses. So no personal use by any of those parties. Also, when you do introduce the LLC, you have that checkbook control, which is something that Whitney referenced. And it can be very easy or tempting, or even if it's by accident, to commingle funds. And you just have to remember that the checking account belongs to the LLC, which belongs to the IRA. So with real estate, it's very hands-on, and you may have to pay contractors and such. So just being careful to not commingle any personal funds with IRA funds. And then when you hold real estate in an LLC, you do have to be responsible for the accounting, the record keeping. There is also annual filing that you're responsible for. So there are some responsibilities when you have anything, real estate or otherwise, into the LLC.
All right. Can I invest in mobile homes, mobile home parks with a self-directed IRA? And if yes, should I set up an LLC?
So yes, you can invest your IRA into mobile homes. So instead of a deed, it's more like a title, similar to a vehicle, and the title is issued to the IRA. That mobile home does need to either pay rent for a place for that mobile home to sit, like a lot or a park, or your IRA can buy the land and then buy the mobile home to sit on that land. But you could not take personally owned land and put a mobile home on that land if you bought it with your IRA, and then vice versa. You could not take a personally owned mobile home and put it onto land owned by the IRA. So solely owned by the IRA, it's up to you if you want to set up the LLC. It's not necessary. If you feel like you would benefit from the checkbook control. If you have several properties, then the LLC is really useful. Or if you're planning on doing auction where you need quick turnaround, then yes, an LLC is very convenient, but it is not necessary.
All right, great. Is it complicated to hold real estate in a 401k or self-directed IRA account?
It's really not. It's not complicated if you plan ahead. You do need to make sure that you're keeping a cushion in the account. So I like to tell the account holders, don't empty the account on the purchase. You need to leave some funds in there to cover unexpected expenses. If you're buying raw land or vacant land, you'll probably just have an annual tax bill and you don't need to leave as much in the account. But if you're going to buy residential or commercial, you're certainly going to have expenses that come up. And obviously, the idea is to generate income, but you want to make sure that you have time for that income to accumulate. Who knows? You might need a dishwasher, or, heaven forbid, something like a roof or AC unit. So you just have to be prepared ahead of time. And then otherwise, it's just really the same. If you have experience in real estate investing, The process with the IRA is or 401k is the same. It's just instead of your name on the deed, it's the IRA or the 401k plan. And then just no personal use. So
All right. So self-directed IRA real estate flip using funds from other non-IRA account. Can I have all profits go into my IRA account?
okay, so if I'm understanding this question correctly, it's there's a piece of real estate and you want to use your IRA and non-IRA money. So if you buy a property, you are allowed to buy it. It's tenants in common. You're allowed to partner side by side to buy real estate. If you either it doesn't matter if you buy and hold or flip, when it's time to sell the property, all of that income does have to be separated pro rata. So you get your share and your IRA gets its share. So no, you cannot have all the profits go to your IRA if you own part of it outside.
All right. When I own rental property in my IRA, can I stay in the property as long as I pay rent?
So even if you pay a fair market value, the IRS does not allow you to use the property personally. Put simply, they just don't trust you to continue to pay that fair market value, or they expect you to maybe make it up somewhere else along the way that's maybe not so easy to track. So unfortunately, the IRS says no personal use, even if you pay rent.
All right. Can IRA money be used to buy rental/business properties in foreign countries?
Yes, IRAs are United States entities or plans, but you can actually buy foreign property. Depending on the country, though, you may need to do an LLC. I think, if I remember correctly, Mexico, if you buy property in Mexico, I don't believe their government allows IRAs to hold property. But if you set up an LLC, I believe that you can purchase property in Mexico through an LLC. So you would just need to check with the country where you want to make the purchase and what their requirements are. But on the IRA's end, there's no restrictions on foreign investments.
All
And
right.
as I said at the beginning, the IRA rules are different than the 1031 because the 1031 rules stipulate that the purchases have to be in the in the States, right, Teresa?
So yes, but you actually can do exchanges on foreign property, but you have to buy more foreign property. So you can't exchange US property for foreign or exchange foreign for US property.
Okay.
All right. Brandon, investing in retirement in self-directed IRA versus non-IRA.
Okay, it's a good question. So anytime you invest in an IRA, there's going to be tax advantages because IRAs don't recognize capital gains. There's a reason that rich people fill every type of savings plan that they have, whether it be an HSA, an ESA, or a retirement plan, with as much money as they can, because the longer you can defer taxes, or in the case of a Roth, it never gets taxed again, but the longer you can defer taxes, the faster your money's going to grow, because you don't have the capital gains at each sale point throughout the history of the life cycle.
All right. Limitations and benefits of self-directed IRA/Roth IRA investments.
I'm not going to touch on this too much because Sasha already covered the areas. You have prohibited transactions and disqualified parties. So you can't invest in life insurance or collectibles. It's not allowed. And then disqualified parties, Sasha went over pretty thoroughly with who your IRA cannot do business with. I will say some custodians put their own limitations on the accounts. For example, Charles Schwab, Fidelity, TD Ameritrade, they're not going to let you buy real estate because, frankly, they don't know how to make any money on that. And secondly, they don't want to deal with the administrative burdens of closings and tax bills and insurance and deeds and all the fun stuff that we deal with. So they limit your investment choices at the brokerages and banks to the products that they sell. Midland doesn't sell investments, so we open the door to a much broader range of investment choices.
All right. And lastly, Brandon, what are all the things I can do in my self-directed IRA?
Well, it's pretty much limitless aside, again, from what the IRS says you can't do, and that's few and far between, life insurance and collectibles. Midland doesn't put a lot of limitations on clients. So most of our clients buy either real estate. We have a lot of lenders. They either loan money to a business or an individual. Maybe it's a partnership deal where they're fronting the money and somebody else is doing the rehab work. I'm just making that up as an example. We have clients that do secure lending where their IRA actually holds a mortgage and acts as a bank. Private equity, private hedge funds, private startups and venture capital, precious metals, futures and Forex trading accounts. These are all examples of asset classes that we see all the time here at Midland.
All right. So Matt, interested in how to invest in cryptocurrency. Can you please discuss?
Yeah, so this question actually comes up a lot, especially with rising prices of cryptocurrency recently. And there's a lot of different ways that your IRA can invest in cryptocurrency. So let's start on some of the, we do see people who do futures in the crypto market. So you can actually trade futures through crypto. We see private placement investments or other pooled investments. A fund might invest in crypto, or a certain company, that's their primary goal, is to pool money together and invest in cryptocurrencies. And then there's directly investing in crypto, and that can be done in a couple different ways. One would be through a broker directly. So there may be a broker that allows IRA accounts to directly invest on their platform, buy and sell cryptocurrencies using IRA funds. And then some platforms will require that the LLC is established. So we talked about the checkbook control. Many wallet providers don't want to have the IRA directly listed. They're not going to do their own IRA administration. So Midland clients will set up an LLC, have the checkbook control, and then set up an LLC account with that wallet provider and invest in crypto that way.
All right. So is it possible to open an IRA or a Roth IRA account at Coinbase to purchase or trade cryptocurrencies? And what are the fees?
So Coinbase is one of the wallet providers that our clients are using checkbook control for. So Coinbase, at least currently, is not set up to directly have the IRA accounts open in a Coinbase account for investment. So our clients are setting up an LLC and then setting up a account at Coinbase to invest in cryptocurrency. As far as fees, so similar to what we talked about before, you're still looking at a setup fee, processing transaction, and an annual fee on Midland side. If you're directly, and you do want to invest at Coinbase, the LLC will have its own setup. And then normally there's a state filing as well to consider with the state you file the LLC in.
All right. And lastly, could you please outline the steps needed to invest in cryptocurrency in a Roth IRA, please?
With anything, getting the Roth IRA set up is the first step. So we'll get the Roth IRA set up here at Midland, fund that account either through rollover, transfer, contribution. If you're going that Coinbase checkbook control route, getting the LLC set up then would be the next step. Otherwise, if we're working directly with a brokerage that holds IRAs directly, then we'll complete their application form to link the accounts together. We'll be able to send then your IRA accounts to that brokerage platform.
Wonderful. Thank you. All right, Sasha, back to real estate. We got this question a couple times. If I have rental property in my Midland IRA account, can I perform the property management function?
Okay, yes, this has been a hot topic in the comments. So the easiest way to describe what you're allowed to do is desk duties. So that means that if your IRA owns the property, you're not technically required to hire a property manager, but depending on the type of property, how many tenants you have, and how many expenses that you have, a property manager does certainly simplify things. And so a property manager can collect and deposit monies from rents. They can pay for expenses, and then they would take their percentage for their fee, and then the residual income should go back to the IRA. So what can you do without a property manager? Well, again, back to those desk duties. You can list the property for rent. You can take calls. You can do background checks. You can collect rent, meaning you can take a physical check, but then you need to forward that to Midland. You cannot deposit any of the rents. You can schedule maintenances. You can show up to let the contractor in the house, and you can request bill payments out of your IRA. So you can take an invoice and then submit that request for the check. So hopefully that answers your question. So just to be a little bit more specific, there was someone asking about like a hotel. If you had multiple units, you probably want a property manager for that, just because again, there are those multiple units and you're probably going to have maintenance coming in and out. But um, again, you can list it. You can advertise. The IRA would pay for the advertisement, but you could actually make the phone calls and arrange for the ad to be in whatever platform you wanted to. So yeah, hopefully that term desk duties resonates.
Great, thank you. So this person, I'll follow up to that question. Can they handle the eviction process?
They would probably work with the courts or an attorney. If there was any expenses related to eviction, then the IRA would need to pay for the eviction. But yes, I would think that they could handle the paperwork, and if they needed to go down to the court, that they could do that. Again, the expenses though related would need to be paid for by the IRA.
Excellent, thank you. So this person is 62 years old. He wants to know that if I buy a rental property now with a Roth IRA, when can I withdraw the money for personal use and free of taxes, I'm assuming?
Okay, so I'm going to point out the first part. If you're 62 years old, then you are at the age where you can take qualified distributions. So 59 and a half is the magic number. That's for a traditional IRA or for a Roth IRA. Roth IRAs have what's called a 5-year rule. So when you contribute to a Roth, you've already paid taxes. When you convert from a traditional to a Roth, you've paid taxes. So when can you take out the earnings? Well, that's where this 5-year rule comes in. So basically, the clock starts ticking January 1st of the tax year when the contribution was made. So if you opened your account in January, I'm sorry, it doesn't have to be in January. If you opened your account in 2005, then you would be able to start taking the earnings out in 2010. Also assuming that you're age 59 and a half. So yeah, you could withdraw the rental income after holding it for 5 years. I'm sorry, after the Roth account is 5 years. And this is a little complicated, so bear with me. But if you opened a Roth account, you contributed and opened a Roth account at another IRA, 12 years ago, and now you've transferred it over to Midland, the 5-year clock does not start over. So,
and I want to add something to that response, Sasha. So when you take distributions from a Roth IRA, they're done in a certain order. They're called ordering rules. So you can take your Roth contributions out at any time, at any age, but the earnings you have to leave until you're 59 and a half or have been in there 5 years. But that doesn't mean that rent coming in can't be pulled out immediately before the 5 years is up, because it's all lumped in with the rest of your balance, and the first part of the money that comes out is your contributions. So unless you've used up all of your distributions of all of your contributions, that new income that's coming in could be treated as replacing the contribution from the beginning. I hope that makes sense. So it's very possible you could be taking the income that it's producing out now rather than even having to wait 5 years. But I would talk to your tax advisor.
That was really good. Thank you, Brandon.
All right, keeping it going. If I purchase raw land using Roth IRA funds, can I use a loan to build a home and maintain Roth status?
Okay, so whether you're using a Roth or not, if you want to use a loan for construction or to even purchase a property, you do have to get what's called a non-recourse loan. There's plenty of banks that offer them, but there's no personal guarantee. And so the catch is they usually require a 30 or 40% down payment. And so if you have that in your IRA, you give that amount to the bank, they give you the non recourse loan. And you also need to be able to show that the IRA will have income. So with raw land, you're not going to have any income. But if you can project the build and how long that's going to take, and you know that you can get a tenant in there, as long as you can convince the bank that you'll be able to produce income to pay that loan, then yes, you can do that. And again, that doesn't matter if it's Roth or traditional in this case. This borrowing money in an IRA does generate what's called UDFI, or unrelated debt financed income. This is related to the UBIT that we discussed earlier. So I'm not an expert on how it's calculated. And if you do have any questions, maybe Brandon can chime in, or honestly, your CPA could answer that.
All right, what are the pros and cons of selling real estate, specifically a condominium held in an IRA?
So definitely the benefit and why real estate is such a popular asset class is it's tangible. You can drive by it. That's really attractive to people. The stock market it almost feels like it's just this idea, and it's not something that you can touch and feel and see. So um, definitely the benefit is it's this tangible investment. Obviously, doing it through an IRA offers tax benefits. You can defer the taxes, or if you have a Roth, your future income can be tax free. Another benefit is using your IRA gives you a certain buying power. So if you don't have the money in your checking or savings account and you see this piece of property and you just know that, it's going to be this great property, it's going to go up in value, it's in an up and coming neighborhood. If you don't have the money yourself, then have your IRA buy it. And now you have an investment to help your retirement account grow. And you're able to make the investment that you otherwise wouldn't be able to. You can also partner with your IRA. So if you don't have enough funds in the IRA and you don't have enough funds yourself, then partner up and you can make it happen. Some of the cons of owning real estate in the IRA just comes down to the property management. You need to be really careful to not run to Lowe's and buy appliances and put them on a credit card. And, it can be tempting if it's Saturday night and our office is closed and the tenant calls you and the refrigerator stops. And so those are the instances when having a property manager can be really helpful. Another option in that particular scenario would be to see if the tenant is able to make the purchase and your IRA can refund the tenant, or you can decide to credit it off of their rent. So you just have to plan ahead, which is what we talked about earlier. And then just no personal use. You buy this awesome beach facing property held in your IRA, and I couldn't tell you how the IRS would find out, but I like to say that the IRS put Al Capone in jail, so you just never know.
All right, last question for you, Sasha. How do I set up my Fidelity IRA to use it to invest in real estate?
Okay, so Fidelity is just another general IRA custodian. So this could be, Fidelity, TD Ameritrade, Schwab, whoever. So if you have a brokerage type IRA, or it's not an alternative self-directed IRA, all you need to do is you open the account with Midland, first of all. And part of the application process is providing the details of how to transfer the money over. So you would fill out a transfer form. If it's coming from a 401k or another government plan, you initiate a rollover. So there's some kind of form, some sort of process to move the money. Once your Midland account is funded, you now have a vesting. So it's a name for your IRA, or 401k plans also have a name. and now you can make an offer on the property. So if it's in an IRA, you would make the offer for Midland Trust Company as custodian, FBO, your name and your account number. Midland signs the contract. Midland signs the closing documents. We send the wire to the escrow. So open account, fund account, sign paperwork. We send the wire. Your IRA owns real estate.
Okay, great. Thank you very much. All right, moving on to LLCs again. If I elect to form an LLC for use in my IRA self-directed investments, what year-end reporting will be required?
So if it's an LLC held in your IRA, you're not going to have any tax reporting requirements in regard to doing like a tax return for the LLC. Now, with that being said, if you're using leverage, that may be a different situation. And at that point, we'd say for you to talk to your CPA. That's where some UBIT may apply. And there's a couple, different tax forms that may need to be filled out. If this question's in regard to like our fair market value, we would say it's the previous, December 31st of the previous year for wanting to report your value correctly for record keeping purposes. But again, if it's held in your IRA, there's not going to be any kind of like tax return associated, like as if this was held by you personally. So.
All right. In a self-directed IRA, upon the death of the manager, what happens to the LLC?
Okay, so a couple of different things can happen here. So, and this is where maybe some planning kind of can help. If you have an LLC in your IRA, it's going to be just like any other asset. If the manager passes away and they're the account holder, what can happen is then the LLC is going to go to the beneficiaries. A couple of things that we'll have clients do is they will sometimes appoint an assistant manager then for their LLCs, who's also then on that bank account, so that they can help kind of oversee some of the running of that LLC, in case they pass away. So if there's bills or certain things that need to be paid, it can still happen as we're moving that asset over, so that it's a little bit more seamless. So again, kind of some different options, but you may want to look into that for planning purposes, depending on your personal situation.
All right. Can my self-directed IRA LLC be a partner with a non-disqualified individual with proportional representation?
So yes, so you can partner with a non-disqualified party and you can change your percentages around, and that's not a problem. The problem is if you're partnering with the disqualified party, at that point, once you go into it, your percentages really need to stay the same. So, but if it's a non-disqualified party, you're not gonna have an issue.
All right. Thank you, Whitney. Brandon, is it possible to roll an IRA into a Roth? We got to be pretty quick with these next questions here to get to Teresa. Oh, you're muted, Brandon.
Sorry about that. I'm going to be very quick here. Yes. So that's called a Roth conversion. It's very popular. And there's a simple form that instructs the custodian to move X number of dollars from a pre-tax account to a Roth account, and the taxes are going to be owed in the year of the conversion. So if you did one today, next April, the taxes would come due.
All right. Sorry, I lost myself here. Okay. Can you continue to fund a Roth IRA in the future, regardless of income?
As of now, you have to have earned income to contribute to the Roth. Who knows what will happen down the road, but right now you have to have earned income. Also, there are income limits. So if you make more than a certain amount, if you're single and your modified adjusted gross income is over 140,000, or if you're married and your income's over 208,000, you're not eligible to contribute directly to a Roth. But there is a loophole that's been out there since 2010, and the IRS is aware of the loophole. They've just never fixed it. It's called a backdoor Roth, where you would, if you have high income, you could actually contribute to a traditional as a non-deductible contribution, and then turn around the next day and do a Roth conversion to a Roth account. And it's kind of like a way to get money into a Roth without directly contributing it to the Roth. I don't know why the IRS hasn't fixed that loophole yet or addressed it, but they know it exists.
All right. Does the 5-year rule on your first Roth IRA grandfather all existing or new Roth IRAs?
Oh, well, the IRS never makes anything simple. Sasha covered most of this already. The 5-year rule does not apply to contributions. It only applies in 3 cases. It applies to your earnings, the money that your account has made after the investment. It applies to Roth conversions. So if you're doing a Roth conversion multiple times, like every year, let's say you're going to do 20% of your account for the next 5 years, each one of those conversions has its own 5-year window. And then lastly, inherited IRAs. If you inherit an IRA and the 5 years has not been met by the deceased, the earnings are not eligible for distribution. Only the contributions would be.
Great, thank you. Matt, can I use my Midland IRA account to invest in a startup? And if yes, can I be a majority owner?
I'll separate this out a little bit more so it doesn't get confused that they're the same thing, and I'll kind of combine them. So generally speaking, your IRA can invest in a startup. There are some factors that can make it not able to be done, but generally speaking, that is an investment that IRAs can do, invest in startup companies that are raising capital. Can you be majority owner? So this, I'll take it 2 different ways. So if your IRA is going to be majority owner, it's possible your IRA could be a limited partner or like a silent partner and still be majority owner in somebody else's startup, and that is fine. That can be done. So if you personally are wanting to be majority owner and your IRA is going to invest alongside, it is possible. Highly recommend consulting an attorney. The structuring is very important in that type of investment. Just a couple of factors can make it a prohibited transaction and put your IRA in jeopardy. So if you are looking for that type of investment where you're investing alongside personal funds, or it's going to be your startup company, definitely consult an attorney to make sure it's done correctly.
All right, can I use my IRA to buy stock in private company using existing unexercised stock options?
So if your IRA owns the unexercised stock options, definitely. So if the stock options are held by your retirement account and your IRA wants to basically, use those options to own the stock in your retirement account, that's perfectly fine. If the stock options are owned by you personally, you can't transfer that benefit to your IRA account, or any other prohibited party can't transfer it to your IRA account either.
Okay, great. Thank you, Brandon. Just a few more questions, and then we're going to move on to Teresa. Thank you, Teresa, for being so patient. How do we transfer property out of an account for personal use?
Am I muted? Nope. So this would be called an in-kind distribution, where you're basically taking a property out of your retirement plan and owning it personally. So to do that, you're going to have a certified appraisal prepared and have a deed prepared in the case of real estate, because you're theoretically deeding the property from your retirement plan to yourself, and that's going to be subject to taxes based on whatever the certified appraisal comes out at.
All right, what are the various tax methods of inheritance transfers to beneficiary, spouse versus children?
Yeah, we had a lot of questions about estate planning when it comes to IRAs. In 2019, they changed things up a little bit. So spouses are always allowed to treat the IRA as their own if they're within 10 years of the age of the deceased. So a spouse can treat that IRA as their own. Otherwise, if it's to a non-spouse, for example, the 2019 Secure Act mandated that inherited IRAs be emptied within 10 years. So in prior to 2019, if you left your IRA to a 20-year-old, they would basically have approximately 60 or 70 years to do required distributions. So they could take very small distributions over the course of those 70 years. Now, the accounts have to be emptied within 10 years. So there's not a lot of leeway there. Also, individuals have 10 years, but estates or trusts only have 5 years. So I'm not a financial estate planner, but a lot of them will tell you it's better to leave it to an individual because you can stretch the benefits of the IRA out a little bit longer than if you leave it to a trust.
Great, great. What are the penalties associated with withdrawing funds due to job loss with COVID-19?
Well, you can't do that anymore. In 2020, you could have withdrawn up to $100,000. It's penalty free, but not tax free. But there's nothing in place in 2021, so we've passed that deadline already.
All right, can substantially equal period payments be taken from my self-directed IRA?
Very interesting question, very uncommon. Most people don't know this exists, but it's also called a 72T. And that means you're taking distributions from your IRA prior to reaching age 59 and a half. And you don't have to pay a penalty if you follow the procedures of 72T. I'm not going to get into 72T today, but yes, a self-directed IRA is no different than a brokerage or bank in terms of the rules. But I would recommend talking to an accountant before you start taking substantially equal period payments.
All right, and lastly, Brandon, can this IRA be given away? What are the tax results?
No, you can't give your IRA away. It's an individual retirement account in your name. Sometimes in cases of divorce, it may be, some of it may go to a spouse or something like that, but you can't give it away. You can make charitable distributions, qualified charitable distributions of up to $100,000, and that can fulfill your required minimum distribution if you're in that at that age. But that's the only way that you could really give it away would be to a charity, a qualified charity.
All right, great. All right, so that concludes our IRA portion of the presentation. If you do have any additional questions on this topic, please put them in the questions box, and our experts are answering them live still. So we're going to switch gears to the other side of our business, which is 1031 exchanges, which is just another tax saving strategy to defer capital gains on real estate. So Teresa, can you give us a little bit of information about 1031 exchanges?
Sure. So 1031 is a section of the tax code that basically says if you sell investment or business use property and buy more investment or business use property of equal or greater value, you get to defer the capital gains, depreciation recapture, and state taxes typically, and the net investment income tax if that would apply to the transaction. So it really is a tax deferral strategy. You're basically just delaying paying the taxes on the sale of appreciated real estate by doing the exchanges.
All right. So what are the timing rules, and can you get an extension on these timing rules?
Okay, so you have two deadlines that you need to be mindful of if you're doing an exchange. The first is you have to complete the 1031 exchange within 180 calendar days of closing on the sale of your current property. So yes, calendar days. So if day 180 falls on Saturday, Sunday, or a holiday, that is still technically your deadline. So you have to plan accordingly and make sure that you close on the business day prior to that holiday or weekend. Within the first 45 days of that 180-day period, you will have to identify what you are considering purchasing as your replacement property in the exchange. Only what is identified as of day 45 will qualify. So it's really, really important that clients are on the ball with respect to looking for those replacement properties, even getting them under contract if they can. In this particular market, it is really, really hard to identify something and not act on it immediately. At least that's what my clients are telling me. So in terms of extensions, the only time there's ever an extension afforded to a taxpayer is in the event of a natural disaster, such as a hurricane, or there were some extensions afforded last year due to COVID, but they are IRS issued. It's not something that you can apply for, or you can ask me, but I can't give you an extension. So it really does have to come from an IRS notice.
Great, thank you so much. So can we place a property we have under contract before the sale of the original property?
Absolutely. Ideally, you would set the closing to take place within, a couple days of closing on your sale, after closing on your sale, so that you can avoid having to do what's known as a reverse exchange. But if you find yourself in a situation where you're under contract to purchase and your sale doesn't close when it was supposed to, or you can't find a buyer for your current property, you would have the opportunity to pursue a reverse exchange, which is a little more involved. But in a nutshell, it allows you to acquire the replacement property before closing on the sale of your existing property.
All right. So in a 1031 exchange, does the new property have to be the same type of property as the one you sold?
Oh, good question. No, it does have to be, all real estate qualifies, and as long as it's held for investment or business use, then it'll work for the exchange. So if somebody's selling an apartment building, they don't have to buy another apartment building in order to make the exchange work. You can go from residential to commercial property or from land to residential. It's entirely up to you. The key is how you are going to hold and treat that property.
All right. So when does a 1031 exchange become taxable?
When you sell that final property outright. So if you were to do exchange after exchange after exchange until you pass, your heirs will inherit that property at whatever the current market value is. So all of that deferred gain that you deferred through the 1031 exchanges is going to be eliminated. But if you ever decide to sell that property outright and not do an exchange, then that's when those deferred taxes will come due.
So how does an exchange work from a tax planning point of view?
So that it's more a deferral strategy. I think we kind of touched on something just a minute ago, that if you plan accordingly and you hold on to the final property that you acquire in the exchange, you can set it up to where your heirs inherit it with at the current market value and all of that deferred gains wiped out. Another strategy that someone could pursue is if they were to do an exchange and eventually wanted to move into that replacement property after a sufficient amount of time, they do have that option. Unlike IRA properties, with 1031 properties, there is a little bit of flexibility with respect to personal use. So I'm not really sure what they mean from a tax planning strategy. So they're welcome to reach out to me directly, and I'm happy to discuss that further, just to make sure I address the question.
Great, thank you. Okay. So if I sell my UK rental property, what do I have to buy to qualify as a 1031 exchange?
Okay, so you can exchange foreign property for more foreign property, but you would not be able to exchange foreign property and reinvest in the US or vice versa. The other thing is really, is particularly with this UK property, the exchange would really only help this person if the sale of the UK property triggered a US income tax consequence. If this person happens to be a UK citizen selling UK property, then the 1031 is not going to offer any benefit to him or her.
Okay, why would you have to do a 1031 exchange on the sale of an income property in a self-directed IRA?
You wouldn't now, unless in a very rare situation, which I will not delve into right now, it's a class all on its own, if there's debt financing on that property, a 1031 exchange would allow them to defer the taxes on that debt finance portion. But typically, since most IRA properties are not financed, there is no need to do a 1031 exchange on an IRA property. This is solely for property held outside of an IRA.
All right.
Trying to stump me.
They're not doing good yet. So why would you, okay, for 1031 exchange, sorry, can we add additional owners to the exchange new property?
Yes, but proceed with caution. So there's a couple of things to keep in mind. One, there is something known as the same taxpayer requirement, which means whoever is the taxpayer selling the relinquished property is the taxpayer that needs to acquire and take title to the new replacement property. You can, perfect example is if you're buying something that's more expensive and you want to bring someone else in on the deal, you could partner up with them as tenants in common. You'd want to make sure that you are taking title to an interest that is enough to equalize your 1031 exchange, and that other individual could take title to the remaining percentage interest. But it would have to be as tenants in common. You couldn't, say, form an LLC with this other investor and buy the new property in a completely new entity, because now we're not maintaining the taxpayer that's completing the exchange.
Okay. Just to circle back on the UK property one more time. So the person said that they are a UK citizen, but a US resident living and working here in the US. The rental property is being depreciated on my and my husband's tax return.
So then there may be an opportunity to do the exchange if you're going to have a U.S. tax implication. Probably something to talk about with your tax advisor just to see what that is. And yeah, I mean, you could potentially do an exchange on that, but you'd have to buy more foreign property.
Okay. Is Biden planning to abolish 1031 exchanges? And if so, how soon will it happen?
So I wish that I had a crystal ball and could tell you what the future held, but I don't. I certainly hope not. Yes, that is what's circulating, and it is a possibility that 1031s could go away. I think what we're trying to encourage people to do now is to contact their legislators and make sure they understand the impact of 1031 and how it impacts more than just, or benefits more than just, the taxpayer that's deferring the taxes through the exchange. There's anyone that's in the real estate industry would be impacted by this. So I think the best defense is a good offense. So I would say if you're concerned about it, we would encourage you to contact your legislators. There's a website that is 1031taxreform.com, which would give you a really easy link to just contact your local representatives and encourage them to preserve 1031 exchanges. We just don't know what's going to happen, but the more of us that can get out there and get the word out and ask for the preservation of 1031, maybe the better chances of it actually getting preserved versus abolished.
All right, great. Lastly, where can I find documentation regarding 1031s?
So if you're asking for information, you can find a plethora of information on midland1031.com. If you're looking for specific documentation regarding the exchange agreement and things like that, we don't really have that readily available. I'd be happy to discuss with that person, the terms of the agreement and kind of give you a general idea, but we're not really sure what documentation they're looking for. So.
All right. Okay, so looks like we got through all of our questions that were submitted, which is impressive, honestly. We had so many. So that concludes our Ask an Expert webinar for today. Thank you to Matt, Sasha, Teresa, Brandon, and Whitney for answering all of these questions for us. You will all receive this as a recording right when this is over. And if you do have any more questions, feel free to email any one of us and we'll get that answered for you. So thank you all again, and I hope you all have a great rest of your week.
Thank you.
Bye.
Thanks.
Thanks.